Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, on Friday it was all eyes on the non-farm payrolls and also on the Fed Chairman Jerome Powell. On Friday, the Labour Department said the US economy added 312,000 jobs in December. That leaped past a forecast of 178,000 jobs, its highest level since February 2018. The unemployment rate rose to 3.9% from a decade, 5-year that is, low of 3.7. As more workers entered the labour force, the average hourly earnings rose by 0.4%, above expectations of 0.3. A little later on, though, after the non-farm payrolls, speaking at the American Economic Association annual meeting, the Fed Chairman Jerome Powell, accompanied with his predecessors, former Fed Chairman Janet Yellen, and also Ben Bernanke, which sparked a strong decline in the greenback and also a strong rally in the stock market after he delivered just the message investors wanted to hear. That is, the Fed will be flexible on policy and isn't in a hurry to raise interest rates. Looking ahead this week, though, we do have the market will be looking at Wednesday's minutes of the Federal Reserve December meeting and a speech by Fed Chairman Jerome Powell later on that day, as the market still tries to assess what the Fed is actually thinking on its monetary policy. Looking at the Australian dollar, though, you can see that the market has surged since that flash crash and now looking towards the 60-day moving average, with the technical implications slightly bullish, but no trend now to the bearish case does suggest we could see a challenge up towards this level of 71.68. I am a seller around 70 to 90, as I do believe the market will turn around and plummet. I'm not overly confident of this move and therefore should give opportunity to shorten the market and see a return back towards the lower region of 70 cents or back towards the region of 69, which is the forecast for the start of this year. We're at mid-range, I believe, in the euro, as it still challenges either side of the support at 112.65 to 114.65.85 resistance. From the outside range day, the market is nearly negated the bearish outside range day because we still need confirmation to this signal. Nevertheless, the dollar index is still holding above the level of 95.40. Until we get a break of that level, then I am still bullish on the US dollar and bearish on the euro. With the immediate target seen at 113.45 and the resistance, as I mentioned, should cap around 114.65.85. The dollar yen is finding a little bit more of a leg to the upside, but still may be contained by this resistant level, which comes in somewhere around 109.60.70. Since the flash crash of the low region at 105, there's no doubt the market isn't actually that long anymore. With all the stops taken out, the market's probably getting a little bit short, so we could see a bit of a squeeze, but I still feel that safe haven demand will come to yen strength and could see another return back towards the lows seen last week. Looking at the pound, no doubt Brexit deal is still uncertain as it weighs on the pound, with the market starting off with a debate to the uncertainty on what will come out of the Brexit deal itself. It is assessed, though, that since the flash crash of the low 124 region, the market's found itself a bit more legroom to try the upside. Until we get a break above 128, then I still view the market could still test lower, back towards the 124 region, and reassess from there. But it would seem that we got to the top side of the range on Friday at 1,300, after posting a high of 1,298. With the rejection on the dailies, we have posted an outside range day, and therefore we need confirmation. It is assessed, though, that we could see further weakness into the come-in session for gold and could see a tumble back towards the region of 1,260.64 and reassess from there. But as I mentioned, we do need confirmation to this negative signal, and if so, at present, still does pose a little threat that we could see a slight correction into this week. Wrapping up with oil, well, the market did break through the resistance of 48.5, and from that has given further scope to the upside to a possible target of $52 a barrel. Any pullback should find support now around $46.50. It is assessed though from the break. This is a very long trend that comes back from or emanates from October 77 highs, that the break should continue on to this target. As confirmed by the technicals, I'm still comfortable to hold long position in oil. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.